Hello everyone. In my previous classes, I explained about purchase book, sales book, purchase return book and sales return book. And in this class, I am going to teach you about journal proper. What is the meaning of journal proper? It is a subsidiary book of accounting. Here we will record the transaction that do not fit into specialized journals like cash book, purchase journal or sales journal. It means what? A book that is maintained to record the transaction which do not find place in special journals. That is known as journal proper. It means what? In purchase book and sales book, we will record the transactions that is related to purchase or sale of goods on credit. Credit purchases or sales of goods or inventory. Only these transactions we will record in the purchase book or sales book and purchase return book and sales return book. And we will not record cash purchases or cash sales or purchase of any assets, credit purchase of assets like furniture or machinery. These transactions we will not record in the purchase book, sales book, purchase return book and sales return book. So that type of transactions we will record in the journal proper. For example, any adjustments or any rectification of errors, opening entries, closing entries and transactions like credit purchases or sale of assets, not inventory. Transactions like credit purchases or sales of assets are recorded in the journal proper. Means these type of transactions, these are recorded in the journal proper. Means these type of transactions we will not record in the purchase book, sales book or purchase return or sales return book. Here we will record all these type of transactions in the journal proper. Means here cash transactions they will not come. They will recorded in the cash book. And credit purchase of goods or inventory, that also we will not record in the journal proper. We will record in the purchase book. And sale of goods on credit, the transactions we will record in the sales book. We will not record in the journal proper. Only these transactions like adjustments, rectification of errors, any opening or closing entries and transactions like credit purchases or sale of assets, they are recorded in the journal proper. Now we will see the type of transactions that are recorded in the journal proper. First one is opening entries. See here, these are the entries to open books at the beginning of an accounting period and record therein opening balances of assets, liabilities and capital. This is about opening entry. Here we will record the beginning of the amount at the beginning of an accounting period and we will record therein the opening balances of assets, liabilities and capital. Now we will see the example for opening entry. See here, on Jan 1st 2025, a business has assets worth rupees 50,000 and liabilities worth rupees 20,000. See, this is the format of journal proper, that is date, particulars, ledger folio, debit and credit balance. This is the format of journal proper. Now we have to pass the journal entry. Here date is Jan 1st 2025. Jan 1st, assets, account, debtor, to liabilities account, to liabilities account, assets account we need to debit, that is rupees 50,000 and liabilities account we need to credit, that is rupees 20,000 and the difference is to capital account, that is rupees 50,000 minus 20,000, that is rupees 30,000. And here we need to write down the narration, that is being business started with assets of rupees 50,000 and it has a liability of rupees 20,000 and capital of rupees 30,000. We have to write down the narration here. Okay, so this is about opening entry. And next one is adjustment entries. Adjustment entries means what? So these record adjustments like outstanding expenses, prepaid expenses and accrued incomes. See here, these all transactions we will not record in the purchase book, sales book, purchase return book, cash book and sales return book. Here we will record in the journal proper. Okay, we will now see the adjustment entry. So these record adjustments like outstanding expenses, prepaid expenses and accrued income. See, for example, an outstanding salary of rupees 8,000 at the end of the year should be recorded as, how we have to record the outstanding salary of rupees 8,000 at the end of the year? It should be recorded as salary account. Here write down the dates. We will take it as Jan 2nd, 2025, salary account debtor to outstanding salary account, that is rupees 8,000. Debit should be equal to credit. See, 8,000, 8,000 and write down the narration, that is being salary outstanding at year end. Right, like that you can write down, being salary outstanding at year end. This is the narration. Okay, first one is opening entries, second one is adjustment entries. Next one, third one, that is rectification entries. Rectification entries, it means what? It means here we will use to correct the mistakes. Rectification entries means we will use to correct the mistakes that is made in the previous journal entries. In the previous journal entry, if there is any mistake, we need to correct it. Means used to correct the mistakes made in previous journal entries. For example, suppose rupees 5,000 rent, it was mistakenly debited to the wages account. They mistakenly debited to the wages account, that is rent. Rent was mistakenly debited to the wages account instead of the rent account. Instead of the rent account, they mistakenly debited the rent account to the wages account. So our entry would be, that is Jan 3rd date, rent account debtor to wages account, that is rupees 5,000. What is the narration? Being correction of the rent wrongly debited to wages. Being correction of rent wrongly debited to wages. Here they are telling rent was mistakenly debited to the wages account instead of the rent account. So the journal entry would be rent account debtor to wages account, that is rupees 5,000. Next one is transfer entries. Transfer entries, it means what? Shifting amounts from one account to another. Shifting amounts from one account to another. For example, suppose rupees 10,000, it is transferred from the general reserve to the profit and loss account. Rupees 10,000 is transferred from the general reserve to the profit and loss account. So the entry would be Jan 4th, general reserve account debtor to profit and loss account, that is rupees 10,000. So our narration is being transfer of reserve to profit and loss account. This is our narration. So this is about transfer entries. Next one, other entries. Other entries means what? Here, see here, other entries, it means it includes the transactions that don't belong in any other journal, such as goods withdrawn by the owners for personal use and purchase or sale of items on credit other than goods. But other than goods, goods means we have to record in the purchase book or sales book. Here, purchase or sale of the items on credit other than goods, or goods distributed as samples for sales promotion, or loss of goods by fire or any spoilage. Okay, so these are the transactions we have to record. These, it will come under other entries or miscellaneous entries. For example, suppose stocks withdrawals for personal use, that is rupees 5,000. Stock withdrawals for personal use, that is rupees 5,000. Here write down the date, that is Jan 5th, and particulars, ledger folio, debit and credit. For personal use means it will come drawings account. Drawings account debtor to inventory account, that is stock withdrawals. So to inventory account, that is rupees 5,000. Being, what is the narration? Being stock, see here, 1 minute, yes, being stock withdrawals for personal use. Stock withdrawals for personal use. Okay, so this is the journal entry for stock withdrawals for personal use. Okay, this is about journal proper. I hope this concept is clear to you all. If not, please leave a comment. Thank you.